All right, what's up, everybody? Just waiting for people to join along. Let's see who we got out there.
What's this weird number?
Mm, 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 mm. Hey, what's up, Jay? How's it going? Starting to add people in here. We're gonna get started in a second. Uh, Everybody know I'm a Lions fan, so y'all can talk your crap now while the draft's going on. But we know who's gonna be in the Super Bowl when it's all over with. Usually I don't talk crap, so be prepared for a little action today. While we're waiting for people, say what's up in the chat group. Let me know who out there. And we're going to get started in about, give or take, about 30 seconds or so. Want to get into it and get it over with. Don't want to keep y'all here for a long time. Just want to keep y'all here for a good time. All right. People starting to file in. People starting to file in. All right, we 2 minutes past the hour, so we're going to just jump into it. Of course, this is recorded so everybody can see it later on. All right, just jumping right into it. See, as soon as I was about to jump into it, then we got the Hayes. Hey, Stephanie. Hey, Anna. Hey, Levita. Stephanie said I talk crap every day. She's right. All day, every day. But let's get into it. Stephanie, you're a hater. That's all. I'm just going to leave it at that. But okay, let's get into it. Berto. Hey, what's up, Berto? How's it going? I know Berto, he's got a new one out there, so I know he's catching hell every morning. Well, let's be honest, his wife's catching hell with wake ups and sleeps. Berto probably sleeping like a little kitty. Hey, Sai, how's it going? I believe I pronounced that right, so forgive me if I pronounced that wrong. Hey, what's up? All right, let's get into it. Let's chop it up. I'm gonna be honest. I'm gonna be honest that the market looks a little different. Looks a little different. When I'm talking about the market, there's a different market between Main Street and Wall Street. Everybody think that Wall Street is the economy. Think it's the everyday people, me and you. But Wall Street is not. And I'm gonna break down a couple reasons why Wall Street is not, and just based off of news that came out this week. And again, this is the weekly wrap up, and I'm just going over the financial news that has happened over in the past week or so, just to give you an ideal insight of what's really going on in the market. And I'm trying to give you a non-biased opinion. I mean, of course, I think one way, but I also look at the market, or I look at the news, or I look at what's going on in an unbiased way. Now, depending on how I debate that with you is just depending on you. I've debated people in the right, very left, and I've debated people that's on the very left to the right. But it's just all about gathering information. But here we go. The S&P 500, that is the market. If anybody ever tell you, look at the Dow Jones, look at any other thing that represents the market, that is not a representation of the market. The Dow Jones, in general, the Dow Jones is only 30 stocks. The S&P 500 is 503 of the top U.S. companies that's represented in the stock market. So it gives you a broader breadth of what the U.S. economy is like. So the market in general was up 4% on the week. Of course, we're coming down at the beginning of the week about 15% from the highs. So we're doing a little bit better, but we're not out of the woods yet as far as the economy. The NASDAQ was up maybe about 5% on the week. But things that's in the news. We've talked about on this channel many of times The time to prepare for a quote unquote recession is before you're told that we're in a recession. And I know I beat that over the head about a million times. And some people look at me and be like, man, what the hell are you talking about? But the truth is if you don't prepare for a recession before it happens, you will be 6 months, 12 months late to the recession. So let me tell you what the companies that many people frequent, many people use their products and services are doing. Let's go to the credit card company. The credit card company just stated this week on Tuesday that the consumers have not stopped spending money. They see ebbs and effects based on the fact of timeliness of payments, delinquencies of payments, the percentage of the loan balance being paid down, that consumers are struggling to pay back the debt that they're taking out. But on the other end, they are spending more money on goods via a credit card. So what are the credit card companies doing? The credit card companies right now, they're stashing away funds. American Express came out and said it. MasterCard, Visa, they came out and said it. They said the consumer is strong, but we're stashing away funds because we think a big delinquency period is on the horizon. So you think you're doing something when you on the Amazon reviews and you reviewing stuff at Kohl's and you're reviewing different avenues and projects and thinking, oh, this is a good product for me. Understand, big bank, corporate America are studying you way more than you can ever study them. So big corporate America see what you're doing. Corporate America see that you're overextending yourself on your paychecks. They see it. That's why they stashing money to the side for the people that's going to be delinquent in the near future. And I'm not here trying to rain down saying, oh, it's about to be a major recession. That's not what I'm saying. I'm telling you what the companies are saying. And the companies have more data, more analytics, and more everything on you than you have on them. So that's just a canary in the coal mine of what's going on out there. And then for people who got questions and things like that, just keep on asking them. I'm going to get through the weekly wrap up, and then I'm just going to smash and answer all the questions at the end. Just so you have the FYI how it's going. All right, the tariff war. We hear, depending on what side of the aisle you're on, depending on what news network you're on. I mean, me, I'm a very big on financial news. We hear it, there's agreements coming down the horizon. There's no agreements as far as tariff. That's what I meant to say. As far as tariffs, there's agreements on the horizon or not on the horizon. And then we come out Friday and then there's, hey, we about to put more tariffs on more people. All right, it's a little hot in here, so I'm going to take off the hat. But yeah, so with that, understand the tariff war is not even close to being over. It's not even close. You still got the China, that whole mess with China. That's a whole separate entity of what's going on. Let's just talk about the tertiary deals that's out there. Okay, Trump raised the tariffs, let's say aggregate 35, 40% per country. Then he brought it down to 10%. And then now negotiations going on. And then they have to negotiate with each country. And then could there be extension when July comes? Could it be extension when May comes? Who knows? So it's going to be an up and down, news focused, clickbait maneuver all through the summer. So if you're basing your plans, what you want to do with your family, what you want to do in the stock market based on the headlines, you are in trouble. Now, my biggest thing is when the market is down, you take advantage of the market. When the market is up, that's when you take time to take some chips off the table and then take care of other obligations that you have. All right, what else going on in the news? Home sales. This is what I like. It came out, I believe this was Monday. They did the data analysis and home sales dropped to the lowest price, the slowest point. The home sales, not the price. Home sales, the number of people that's buying has dropped to the lowest point since March of 2009. So for us old heads out there, I know it's a couple out there. Nobody ain't gonna want to raise their hand for that. But for us old heads out there, March 2009, that was at the crust. That was at the bottom of the GFC. Great Financial Crisis for people that's younger that don't understand what that is. Great Financial Crisis. That's what that was. So the number of home sales today is at the same pace and level of March 2009. Do with that what you want. Do with that what you want. You know my mantra. I'd rather you be prepared than surprised. I'd rather you prepare and don't let the news media, no matter which side, right or left, be your brainstem. I'd rather you prepare for every situation instead of letting the news media tell you what to do after the fact. Because if the news media is telling you, you're late to the game. So, now when it comes to home buying, it's the slowest pace. We already seen the survey where it said 82% of the people that come out, the 82% of the people do not want to buy a home because of the high interest rates. So when the news media put that out, what they do on a general scale, that makes everybody say, oh, it's a bad time to buy a house. So for me, the nerd, the contrarian, the value guy, I look at it as that means there's 82% less people that I got to compete with to buy properties. So if 82% of the people are not out there buying properties, but I know that the number of properties that's on the market is up there pre-COVID conditions, that means I have so much room to maneuver, so much room to get a lesser price because I don't have to pay and I don't have to compete with the person to the right or left of me. And I've literally done 3 or 4 deals in the past year that way. I've done seller financing deals when they wanted conventional deals. I just went to them like, hey, I got this offer. Do you want this? I'll give you a decent down payment and then I'll just pay you on a monthly calendar. They took it. And I did that 3 or 4 times in the past year. Again, but I don't let the news media tell me what I should think. I'm always contrarian to what everybody else is doing. So now we're at the sales, the lowest sales since March 2009. That was just a good anecdote for me, a good pricing point for me, because now what I do is when I go look at a property, I offer a lower deal. Now, am I going to win every deal? Hell no. If I'm putting in 30, I'm expecting to win too. But I'm going to put in 30. And then the deal that I'm going to get is going to be the best deal. So that is the mindset that I have when it comes to acquiring property, acquiring stocks. Same thing. The market's going down. I'm always the inverse. The market has been going down. This week is up 4%. But the market in the past, month or so has been down roughly about 15%. Everybody's running for the exits. Me, that's when I'm diving in. When the market's going up, everybody's excited because the market's going up. I'm looking a way to preserve capital, to get capital set up for when the next downturn comes, which we're at now. So now I get to deploy my capital at a lower rate, and then finally when the market turns and go back up, I'm going to benefit for being able to take advantage of that slow run. All right, let me go keep on chopping through this. Tariffs. Let's get this tariff thing over with. Tariffs. I honestly believe they're gonna be here to stay in some form or fashion. I don't know how high, don't know how low. Just be prepared to pay a little bit more early on. So for people, how the tariff work is like this. Wherever the tariff is at when the go live date happens, we're going to get that initial shock. Some companies, and again, it depends on what you're doing, what products or service or whatever you have going on. Some companies are going to eat all of the cost of the tariff. Some companies are going to split it half and half with the consumer. They're going to eat half of the cost and the consumer is going to eat the other half. And the reason why the company itself can eat half of it, because their profit margin was already so high and then they want to keep the demand going. So they're going to split it half and half, them eat half, the consumer eat half. It's going to be some companies like the Walmarts, the Targets, the big box stores who already have thin margins on their products. They're going to pass the tariff 100% off to the customer. But then once that tariff, wherever it's set at, we're going to have that initial shock and then it goes back. So that's just the new normal. And then it goes back to the 2 or 3% inflation rate that we've always been saying. So it's not going to rise if, let's say Trump do something crazy and say, oh, we're raising it 50%. We're going to have the initial shock of 50%, and there's going to be 2, 3% increases from there. Now, will it suck? Hell yeah, it's going to suck. But I'm just letting you know. So it's not going to be 50% each year is going up, because I know I've seen some media outlets trying to push that narrative. It's going to be an initial shock, depending on how it's split especially in the big box stores, it's going to be 100% you. But depending on how it's split, then it's just going to go to the normal inflation rate that we've been seeing. So just want to give you that understanding about that. Another survey came out, and this was in the news. 42% of Americans under the age of 30, they say they're barely getting by. Now, I don't know where they surveyed these people, but this is something that I believe. This is something that I believe that's really out there, that because rates are so high, because we've went into a mode of we need to do what we want to do instead of what we need to do. I can see why it's a lot of people, especially under the age of 30. And now I'm sitting there telling my age, but especially for a lot of people under 30, why they saying they barely getting by. In a world where the cost is going higher, pay is not increasing, and we still feel that because we work, we should have some liberties to do what we want with our life. I see why that this number is high as it is. I can sit here and tell you to go buy gold or something like that, but the truth is that there's no real reprieve from it until we do something extreme different. So we know inflation is high. We know the cost of living is high. We're at the extremes on that realm. But now the people that's struggling to get by, especially under 30, we have to do stuff extreme to overcome that situation. And what I mean by extreme, I know it's not comfortable. I know it's not the flavor of the month. I know it's not what your plans was when, you was getting tired of mom and dad and moving out the house. But you got to make your cost of living lower. And just some avenues. I'm not saying this is what you should do, but this is just some avenues. House hacking. Bringing in a roommate and splitting it. I know it sucks. I mean, especially you 30, you feel like, I'm 30 years old, I should have my own. But I'd rather you have money to do what you want to do than for you to be sitting here wondering when the landlord is going to kick you out. Sometimes you got to be uncomfortable to be comfortable. So, I mean, me, especially the younger generation, especially 30 below, I'm always saying, if you're going to buy a house, get a multifamily house. Lower your cost of living. If you get the multifamily house, you can buy the duplex, triplex, fourplex. You can live in one unit, and then you can have the tenants pay the rent for the other units. And then you, as the homeowner, your cost of living may be free or about $200 or $300 a month. That's way cheaper than paying $2,000 a month in rent. So that's what I mean by doing extreme. If you own a house, maybe you have to do something that's uncomfortable, but it's an extreme. Maybe you rent out the rooms. In most metros in the United States right now, rent for just the efficiency, 1 bedroom is over $1,000 a month. So just imagine if you got a 3-4 bedroom house, you rent out those other rooms for $800-900 a month. That lowers your cost of living to get you to do whatever you need to do. So some extremes need to be out there. Gold, if y'all haven't been paying attention to the gold market, grandma and granddaddy always say, hey, you invest in gold, that's where it's at. But gold is at an all-time high. Gold is right now at an all-time high. And again, just giving you some anecdotes about me. I've been investing. I'm always contrarian. So when things are out of favor, I invest in things that's out of favor. And then I know it's going to take years later for those to come to fruition. So when we was having the bull market of, 2013, 14, 15, and prices of gold was more depressed than they are now, that's when I was getting gold. Now, I'm reaping the benefits now. But I'm going to say something out there to the people that's watching and thinking, oh, gold is a good investment now. No, gold's at an all-time high. So I already know, you're going to look in your Yahoo emails, your Google emails, whatever emails is out there, AOL. I know there's some old heads out there that still got AOL. They're going to tell you, oh, this is a great time to buy gold. No, it's not. Gold is at an all-time high. The time to buy gold, silver, if that's the way you play, if you want the physical or the ETF, the time to play gold and silver or the miners is when nobody else is paying attention to them. So the next bull market that goes on in the stock market, then you're going to see gold and silver platinum, palladium, and all those other ones die down. That's when you should be accumulating gold. And that's when I will be accumulating gold. But that's how it works. And then now we see the stock market's out of favor. You hear a couple people anecdotally when you go places, hey, yeah, man, I'm trying to get out of my 401k. Okay. So me, only thing I did was when the market was going up, 3 months ago, when we was hitting all-time highs, I lowered my distribution on how much I was putting into investment accounts when the market was going up. I actually was taking assets off the table. I was selling crypto. I was selling some of my individual stocks, and I was paying off the debt on rental properties. I actually paid off the debt on 2 or 3 rental properties between January and March. So I paid those completely off because, again, the first warning, the first canary in the coal mine to let us know that something was going to happen in the market was Warren Buffett. People can sit here and say Warren Buffett is old. They can sit here and say that he don't know what the hell he's talking about. But tell you one thing for sure, 2 things for certain. Warren Buffett is always good on time. So when Warren Buffett was already, he was getting in cash, I said, Warren, I'm with you, buddy. I'm with you. So that's what I did. I started moving some things in cash. I still had money in investments, but I started moving some things in cash, paying off debt. And then I was like, all right, cool. Now we have this downturn. So what I'm doing during the downturn is I'm loading more money into investments. While it's going down. And yes, I hope it goes down more. I want to see more pain in the market because I want to get cheaper shares. I'm a cheap guy. I'm frugal. You know what I mean? So I want the cheapest shares possible because I know it's going to be 2-3 years in the future that I'm going to benefit off these great buys at the low. I do not chase the market when it's going up. When the market's going up, I'm saying, hell, damn that. I'm getting out of here. Let's see what else we got here. Amazon, for all you Amazon shoppers out there with this tariff thing that's going on. These articles are on CNBC, Yahoo News, CNN, Fox News, so you can follow them on. I wish I could just post the links up here, but I don't have, a staff and team that could just post the links up here while I'm going. So it's just me telling you what's going on. Amazon prices because of the tariffs, especially the tariffs in China, because most of the products you get on Amazon is from the China, Indonesia, Bangladesh, all that area. The sellers on Amazon are increasing the prices on Amazon. So that's a hint. They increase their prices because they passing off the tariffs to you. And God bless them. I hope the demand still stay high for them or whatever. But if it's not, but just know the prices are going up when tariffs hit. Another thing that's going on out there, you see people, especially consumers, and the sad part is it's the middle class and lower consumers, they think that they're being smart. And I'm not discrediting them or trying to play on their knowledge base. That's not what I'm doing. So, survey out, people in the middle class and lower class are trying to front jump tariffs, so they're going out buying appliances, going out buying cars, they're going out buying anything that's impacted by tariffs. Sounds smart. But the question is, because they're jumping to buy stuff, is they jumping because they need the stuff? Or are they jumping because they think that the prices will be higher in the future and they may need it in the future? That's the question. But it's funny that the middle class, and when I'm saying middle class, I'm talking about $100,000, $125,000 or less income. But it's funny that the people that's on the upper end of the spectrum of income, people making $900,000 and higher, they're slowing down on their spending. They're cutting off expenses. They are not just stopping. And for the past 2 or 3 years, I've always said, just stop spending money. Stop spending money to set yourself up for when we have a bad time, you will take a huge advantage of it during a bad time. But that's what the people in the upper echelon of the income spectrum is doing. But the people, and then I'm just going to use the word CNBC use. The upper echelon, 900, 750,000 and higher, that's considered smart money. And then stuff below that, that's considered dumb money in the stock market terms. Not my words, that's CNBC. Y'all go deal with that with them. But that's what's going on. So the rich is cutting down on spending, and then the people that's in the lower class is increasing their spending. Somebody's wrong, but we'll let y'all figure that out. Last but not least, and this is when I'm gonna chop it up and we're gonna hit the questions. Student loans. Student loans, student loans, student loans. So for the people that don't know out there, Department of Education, the powers that be in Congress, I mean not in Congress, the powers that be in the Trump administration, they've decided and they sunset a program that should have been ended in September. The program should have been, student loans should have been showing up on your credit reports September of 2024. But now the sunset of that program has begun, and then now student loans, if you're not paying them, will show up on your credit report. If you have federal student loans, they will start garnishing your paychecks. Be prepared, not surprised. Be prepared, not surprised. So I wanted to throw that out there with you. And it was an article on CNBC while I was thinking about it. And you probably don't know this, but colleges know this. It's 2 million less students in college now than it was 10 years ago. A lot of people in the Gen Z market is leaving college and just going to pick up a trade. And to Born, I believe you, there will not be any student loan forgiveness. And then, so back to the 2 million people less in college, a lot of these kids are just going straight to trades. They're leaving college and going to trades. Because the same cost it is for 1 or 2 years of college, you can get your trade certificate, or probably even less than what it costs for college. But the crazy thing is when they leave college, their income is slightly better than somebody that's, let's just say year one. Year one, a college graduate probably making $65,000. A year one of trade student is probably making $57,000. But there's a difference. The trade student don't have the student loan debt. The one that's making, the college graduate, they got student loan debt for forever and a day. But then as time passed and time traveled, the person with the certificate, they create businesses, then they get employees up under, then their income explodes way faster than a college graduate. And they still don't have any student loan debt. So I'm not sitting here trying to tell people where you should tell your kids to do, but understand it's a major shift. Because remember, when we started getting that mantra, that onset thinking of, hey, you should go to college, it came from the World War II Vietnam baby boomers. I know that was like a big gap, Vietnam, World War II. But it came from that parenting that was used to being in the factories, and they didn't want their kids in the factories. So they said, hey, I'm tired of working, busting my butt 50, 60, 70 hours a week. I want my kids to go to school to push through, to get the white collar job, to be telling the blue collar workers what to do. And then we went on that mindset for years and years to keep doing that. And then so now every time somebody have a kid, oh yeah, you gotta go to college. Oh yeah, you gotta go to college, which is fine. But the thing we forgot about is all the blue collar workers, the ones who told us that in history, who own all the blue collar jobs, all of them are retiring and dying. So the opportunity is more in the certificates, is more in the trades than it is in college education. Because, it's probably people on here that can tell you, automation, AI, is taking a lot of the white collar jobs. So I'm not going to tell you how to raise your kid, but understand, check out the nuances of what's going on. I'm not sitting here trying to tell you to make your daughter be an auto mechanic. But I'm saying there is a trend line moving on. So if you're going to have your kids go to school, make sure it's for a profession that's not going to get whacked by AI or automation, or make sure it's a profession that can actually pay dividends in their life and not just, oh yeah, well they grown, they can go to college, they can do what they want. Nah, those days are over with. You're setting your kids up for failure. They're gonna be sleeping in your basement until they 85. So look out for that. All right. So now let's get in here and get into some questions. I'm blind, so I got to pull this up on the big screen. So give me a second, and then let's get into it. All right. So I'm just gonna start from the top. All right. Where do you recommend? This is JH. Where do you recommend we look to get our information, do our research on? All right. So information, do research. First, just look and read. Me, I'm more of a reader than a watcher. I believe that I get more information by reading, and I read all sides. I read the financial news, of course. CNBC is my first. Also read Bloomberg News. I mean, I'm not gonna go to the extreme, but Al Jazeera is out there. But then see, the thing is, you got to play both sides out. I look at CNN. I look at Fox News. So I look at all of it to see what the breadth is on all sides. Because the true reality is, it's all going to affect me anyway. So I don't want to go just look at people that agree with me. Because just because they agree with me, I could be missing something. So I'm on all ends of the spectrum. And one thing I don't do, I hate looking at news clips because I know it's looking to sway me in a direction. I rather, like when I see a news clip on the news, I see the news clip and I'll be like, all right, give me the whole clip. And then I can defer from it what I want instead of what the news media or social media influencer is trying to pervade to me. So that's what I do. I know people, I know reading it sucks, but yeah. Sheila, thank you. Much love to you too. What else we got out there? Somebody said say my name. I got you. What makes gold and metals go up and down? What makes gold metals go up and down is supply and demand. That's what makes the price of everything go up and down. Of course, since the beginning of time, people believe gold and silver, that was God's money. And I mean, I'm not talking God like, oh, the Bible, or the Quran. I mean, they just thought that was the ultimate money because it comes from the earth. So the narrative is always, hey, if the fiat currency go the way of the Durlberg, then, oh, we're going to go back to gold and silver. That's what that is. But the thing is, gold and silver doesn't have that, it doesn't have that imbalance. It doesn't have that depreciation factor to it. The amount of gold that's in the world is the amount of gold that's in the world. The amount of silver that's in the world is the amount of silver that's in the world. The value is the value. And the fiat currency goes up and goes down. But it's strictly based off supply and demand. When there's more fear in the economy, the price of gold is going to go up. And it's not the price of gold going up. It's the value of currencies going down. But more people are buying it, so it pushes us up higher. So understand that avenue of it. And that's the same when it goes inverse in the opposite way when gold prices go down, because they go up and down just like everybody else. Have you ever accidentally bought a property where you find out it was a high crime area? How did you handle it? So, Berto, I like this question. Yes, I have bought, wait, he said a rental property. All right, wait, is it a rental property, Berto, or is it a property I actually live in? All right, you can answer that down, but I'll still answer your question. High crime area. That's one of the things that when it comes to rental properties, I look heavily on. Heavy on is the crime rate. Because especially if I'm owner operator and I got to show up there, oh man, I don't want to feel like sitting there trying to duke it out with tenants. I don't want to feel like worrying about a drive-by. I don't want to worry about that. So, but the crime rate is a major factor. But when you say, I don't understand how you can go through the whole process of day one to closing and you didn't understand that it had a high crime rate before you bought it. But my first property, I didn't know nothing about nothing. I bought the property just because it was cheap. I'm not gonna lie. It was cheap as hell. I said, hell yeah, I'm in there. But then I look up and then property crime rate is terrible. And then so the tenant was great. I'm not gonna lie, the tenant was great. She did her thing. Actually, I bought 2 properties there. I was double crazy, right? So I bought one. I was like, oh, the tenant paying. That's all that matters. They got to deal with the gunshots and drive-bys. Forget all that. But yeah, so I bought 2 of them, and then the tenants was good. They kept paying, and then I was like, wait. And I never really think about selling, but I was thinking, wait, what am I gonna do if I want to offload these? Somebody else, and of course I bought more properties, so I got more smarter in the real estate game. More properties somewhere else, not there. But I was like, where's my resale? Where's my off-ramp to these properties if I ever want to sell them? So what I had to do was I had to join the board of the HOA. And then I had to take over the treasuries and take over the money of the HOA. And then I start funneling it to security guards. I start funneling it to gates. I start funneling it to different operations to change the dynamic of the tenants that was in the place. And that lasted me, I did that for 3 years. 3 years of work doing that. And then and it's funny that doing that, spending that 3 years, and it ain't 3 years every day, once a month, once a quarter or something like that, doing board meetings, coming up with decisions, having to talk to a lot of vendors. But those same properties, they are 4 times the price that they were when I bought them. 4 or 5 times the price that I bought them. So that's what I did. Born to do it. What's your channel about financial advice? Where are you in the level of things? Born to do it. Where I'm at, far as in the level of things. I know I should have started off with that, but I was trying to get through where I'm at with the form of things, or what makes me think that I can sit here and talk to you and do this. First off, me, I always say I'm a professional PhD student at spending money, blowing money, and knowing what not to do. When I was young, dumb, I'm still young, so ladies, don't tell nobody. But when I was young and dumb, I found every way to blow money. When I was 23, 24, 25, I managed to get myself $250,000 in debt, maxed out extreme amounts of credit cards to the detriment of myself. Go along with that, in 2007, I got out of the military and still didn't hold on to a job, and I proceeded to get myself in more debt. I was around during the heartbeat loan era of the great financial crisis, and I bought a home with no proof of income, and I built a home. I had a brand new car that I just bought 6 months prior before I got in the military. That was another $35,000, and now you're thinking about it, $35,000 in 2009 is super huge compared to the prices of cars today and the income that we had in 2007, excuse me. And then, so I proceeded to go through all that. I proceeded to start a credit card company using a credit card. So I was just swiping. So I had maxed out, 30, 40 credit cards, and then I'm balance transferring. So I know how to do all that stuff. And then, so with that, I had to get out of the whole situation. I had to do something that I didn't think I was going to do. I had to volunteer to go back in the military and go fight again in Iraq, just to pay off the debt. So I started paying off. So the whole time I'm in Iraq, I don't want you to miss a point. The whole time I'm in Iraq, paycheck comes first 15, and then it was all going straight to the debt holder, credit card companies. And I did the snowball, but I was just paying off debt. So I stayed there the whole year. I really didn't buy nothing. Well, I ain't gonna say I really didn't buy nothing. I didn't buy nothing. I didn't buy nothing the whole year. Every paycheck that came in and went towards debt. And then I got back, and then, of course, I lived in a 3,000 square foot house. I know guys pride in houses, 3,000 square foot house. I had to sell the house to get out of that, $100 and some thousand in debt. And I moved from a 3,000 square foot house to a 600 square foot apartment. And that's what I did. And that's how I got out of the debt. And then from there, I proceeded to do other things. I started, stock market, real estate, businesses, and I keep doing that to this day. So that's where my SME status is at, is being a true crazy man when it comes to money, a true delinquent when it comes to money, and finding my way to get out of it. But great question. Taran, if tariff prices are passed on to the consumer, how does it help Americans, or is this simply a long-term play? Well, it's the question with that. That's a good question. Tariff prices are passed on. That's up to the individual store, the importer. So it's up to Walmart if they on each package. It's not a one size fits all. It depends on where their profit margins are at on each package. So the stuff further to the back of the store, so your eggs, milk, cheese, soda, water, just expect those prices to go up. As you move closer to the store and closer to the front of the store in Walmart, the margins are a little bigger, so you should expect Walmart to collect or eat some of that tariff, that extra price. But to the back of the store, expect prices to go But that's not just Walmart. That's Target. That's all the grocery stores because they all dynamics are set up pretty much the same way. Trump is not going to forgive loans. You are right. Trump is not going to forgive student loans. I never said Trump was going to forgive student loans. I am a proponent of not forgiving student loans. And that's just, all right, now you asked too many questions. But I am a supporter of not forgiving student loans because I believe people should be a man or woman of their word. I mean, hell, I just explained to you that I signed all of that. I could have filed bankruptcy. I could have sit there and told those creditors to pound sand and then let it go to debt collectors and then negotiate it for a lower price. But no, I did the debt myself. I paid everybody back themselves, and I never let it go to collections. And I stood on my word because that's just how I look at it. What else we got? White collar, blue collar, targeted by AI. Well, he's asked a question, so I'm gonna keep going. White collar work is more targeted by AI. Blue collar work is more targeted by automation. Automation. Get familiar with that word there. Automation is gonna be the big thing. AI sounds good, but automation is where it's at. Berto, I hope I answered your question about the rental property. If I didn't, please let me know. What else? What type of investor? Born to do it is actually some good questions, actually. What type of investing, short term or long term? I'm thinking that he's asking what type of investor I am. Am I short term, long term, or medium term investor? When it comes to real estate, I am a long term investor. When it comes to the stock market, I am a long term investor. I guess the question is, so what do you do with money? So what do you do with money or about money? Well, with stocks, I can dividends or I can sell puts or sell calls to bring in income. With real estate, I only buy for cash flow. So appreciation is the secondary part of the deal when it comes to real estate. So I still have cash coming in even though I have long-term assets. All right, so if there is no other questions out there, I think I've tackled everything on the things that matter to the consumer. It's a lot of other different avenues and things that's going out there in financial news, but I wanted to make sure I tackled the things that matter to the consumer. It looks like there is no more questions out there. So with that, y'all have a good rest of the day. I'm about to go support the small business at this crawfish festival and get it in, you know. That's my aim and avenue moving forward. But with all that being said, thanks for tuning into the process. We will do this again next week, and y'all have a good one.